Welcome to our series of podcasts called Harnessing India. Today's topic is going to be high conviction investing in India, particularly through the lens of the India 20. We're going to explore how high conviction investing can unlock India's next decade of growth and why a selective thematic approach is essential for sophisticated investors looking beyond the broad-based exposure that exists in most funds. Two lenses for investing in India. Well, firstly, India is a vast, diverse, and rapidly evolving market. There's a clear role for the diversified exposure, and that's what, for example, our India Avenue Equity Fund with around 70 stocks is designed to deliver. It's built for a broad retail audience seeking smoother returns and wider market coverage. But for investors who can tolerate more volatility in pursuit of higher potential returns, there is another more focused way to participate in India's transformation. That's where India 2030 Fund comes in. The high conviction approach essentially is something we're going to discuss. The India 2030 Fund is a 15 to 20 stock high conviction portfolio built specifically for sophisticated investors. It targets companies early in their growth cycle, businesses with long runways, expanding markets, and favorable valuations. In an inefficient market like India, early cycle investing is powerful. Many emerging leaders are under-researched, under-owned, or not yet included in major benchmarks. That's where an inefficiency becomes an opportunity. The three core themes that are present in the India 2030 Fund today is anchored around long-term structural thematics which are shaping India's economic future. Firstly, let's talk about urban consumption. India's cities are expanding rapidly with rising incomes, premiumization, and a young aspirational population. We focus, therefore, on companies benefiting from organized retail growth, financial inclusion, digital payments, lifestyle upgrades. These businesses often experience multi-year compounding as urbanization accelerates. Okay, number two, manufacturing and commodities is also a thematic. India is becoming a global manufacturing alternative supported by policy reforms, supply chain diversification, and rising domestic capacity. We look for companies positioned to benefit from Make in India initiatives, capital expenditure cycles, industrial automation, commodities, and commodity producers with improving balance sheets. This theme captures India's shift from a services-led economy to a more balanced, production-driven model. Okay, the third thematic, external-facing businesses. These are companies that earn a significant share of their revenue from global markets, often in technology, pharmaceuticals, engineering, and specialty chemicals. They benefit from export competitiveness of the global outsourcing model that India operates, India's rising share in high-value manufacturing and services. This theme provides diversification and taps into India's growing global footprint. Why these themes work? Okay, let's explore that. Each theme targets companies with large addressable markets, structural tailwinds, and long-term growth runways. And because many of these businesses are still early in their life cycle, valuations can be more attractive, creating the potential for meaningful alpha. A concentrated portfolio allows us to size these opportunities with conviction, giving winners the space to compound. Two funds that we run have two purposes. Essentially, it's important to emphasize that the India 2030 Fund is not a substitute for the India Avenue Equity Fund. It is a complement, a specialist higher volatility strategy designed for sophisticated investors seeking targeted exposure to India's most compelling growth engines. Okay, so what have we learned today? High conviction investing is about backing the right companies at the right stage with the right thematic tailwinds. For investors who want to capture India's next decade of growth, the India 2030 Fund provides a focused, powerful way to do exactly that. Thanks for listening, and we look forward to catching you in our next podcast. Goodbye.